Hi everyone, welcome to today's session, live analysis session brought to you by IC Markets Global. I trust you've all had a great weekend, spent some time with family and friends. Now let's get the new trading week underway, right? So, all right, before we start, let's go through the disclaimer. And please note that this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading forex and CFDs, as they carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Right, my name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between Everest Fortune Group and IC Markets, where Everest Fortune Group has been the finalist for Best FX and Equity Research for the following years: 2019, 2020, and 2021. Right. Before we take a look at some of the key economic events coming up this week, take note it's a bank holiday in the UK and it's Memorial Day in the US as well. So basically, these two countries have a long weekend and their respective markets are closed as well. So we can expect lighter than usual trading activity and volume for the rest of the day or from this point onwards as well. All right, there's a few things going on this week as well, but I just like to highlight the inflation data that's coming up this week. We've got CPI data out of Australia, the Euro area, and we have the PCE price index out of the States as well. Right, so here's the calendar for this week. Take note, I'm on GMT time. Right, so there's quite a few things going on, but I'll just focus on inflation data out of Australia that's due on Wednesday, 29th of May at 1:30 a.m. GMT. Then we've got the Euro or the flash CPI data for the Euro area on Friday, 31st of May at 9 a.m. And then after that at 12:30 p.m., we have the PCE price index as well. So this is the personal consumption expenditures index. This is the Fed's or the Federal Reserve's preferred measure of inflation. Now, looking at inflation in Australia, right over here, I have the charts for the quarterly inflation rate on an annualized basis on the left, and on the right I have the monthly CPI indicator. So the quarterly CPI on the left has been trending lower since the fourth quarter of 2022. That's great, right? We can see inflation has peaked at 7.8% in the fourth quarter 2022, and in the first quarter it has eased all the way down to 3.6% year over year. So that's great. Inflation is heading in the right direction. And then when we look at it on a monthly basis, since December of 2023, inflation has remained relatively flat at 3.4% and just edging a little higher in March to come in at 3.5%. Now, the forecast for April points to the monthly CPI dropping back down to 3.4%, so highlighting the stabilization in inflation uh, in Australia over the last 4 to 5 months. So we can expect softer inflation data coming in on Wednesday, 29th of May. Now, should we see inflation indeed come in soft on this day, it is likely to function as a bearish catalyst for the Aussie. So take note, any data or result that comes in line with the forecast of 3.4% or perhaps even lower than that, that is then going to likely function as a bearish catalyst for the Aussie. Now, if we do get a surprise uh, result and we see inflation coming in higher than the forecast and the previous month's result, then of course this is quite likely going to cause the Aussie to surge as well, right? So take note how this data point is likely to impact the direction of the Aussie come Wednesday, 29th of May at 1:30 a.m. GMT. Right. Then on Friday, we have the flash CPI data for the month of May in the Euro area. So similar story here as well. When we look at headline CPI on the left and the core CPI on the right, both charts are highlighting or illustrating the annualized reading, which is the year-over-year reading. You can see that both headline CPI and core CPI has eased quite significantly throughout the past 10 to 12 months, with headline CPI coming in at 2.4% year over year, with the core sitting at 2.7% year over year. Right, so they've both been trending lower, so that's great. So softer inflation data is likely to cause the euro to weaken, because that means the ECB is quite likely to move forward with its first rate cut next month. Now we can see that the core CPI is expected to remain unchanged at 2.7%, while the headline CPI is expected to edge just a little bit higher to 2.5%. Now, should we see the result come in higher, then the forecast, right, the respective forecast, this is quite likely then going to cause the euro to jump as well, right? So similarly, if we see inflation data come in line, or even if it comes in softer than expected, then this is quite likely going to cause the euro to weaken as well. So take note of that come Friday, 31st of May at 9 a.m. And finally, we have the PCE price index, which is the personal consumption expenditures index. This is the Federal Reserve's preferred measure of inflation. So all traders and market participants are going to be keeping a close watch on this data point on Friday, 12:30 p.m. Right. So when we look at the PCE price index on a monthly basis, right? These are the charts for the monthly basis. On the left is the PCE price index, headline PCE price index month over month, and on the right is the core PCE month over month. So as you can see here, in the first quarter of 2024, or rather from the end of 2023 to the first quarter of 2024, we can see that on a monthly basis, PCE price index has jumped quite strongly, right? It was coming in very close to 0%, 0.1, 0.2% in October and November of last year, but it has jumped to as high as 0.4% for the headline CPI and to 0.5% for the core PCE. Sorry, PCE. Now, it has started to slow down, right? In February and March, it started to slow down, and the forecast for April points to another month of slowdown as well, where the core PCE is expected to grow at around 0.2%. Now, if you get a set of data that points to a soft result, right, for PCE on a monthly basis and on an annualized basis, right? If you get another soft reading, as what we saw for May's CPI data, then we're quite likely to see the dollar sell off, right? So take note, should we see a weak set of PCE numbers come Friday, the US dollar is likely to come under pressure, right? And of course, if it works out to be the other way, right, we can expect demand to pick up. But looking at how CPI for the month of May was overall coming in line with expectations, I think uh, most participants are expecting the PCE price index to match its respective forecast as well. So I think we are going to get a reading that's going to be in line with the forecast, or perhaps maybe coming in a little bit soft as well. And should that happen, we are quite likely to see the US dollar sell off quite strongly on Friday as well. All right, now let's move on over to TradingView, and we'll start the analysis with the dollar index. And of course, I'll cover some of the other major currency pairs like the euro, the Aussie, and then we'll look at the commodities and the indices as well. And of course, do not hesitate to drop your requests in the chat box as well. I'll be more than happy to go through the analysis for any other currency pair or any other instrument that you would like to see. All right, okay. So here we are on the chart for the dollar index, and I'm on the daily time frame here. So as you can see here, the dollar index finding pretty decent support in mid-May at around 104.20, following 5 to 6 trading days of retracing higher. And it did run into resistance last Thursday and Friday at around 105.12. And you can see Friday was a big down day as well. And that bearish momentum has continued today. So you can see the dollar index has been selling off. And remember, take note, the US markets are going to be closed today for Memorial Day as well. Right, it's a bank holiday, so we are not going to see higher trading volume and activity coming on later today. So markets might be a little bit subdued as well. So please take note of that. We may not get a wide trading range as we normally expect. Now, looking at the dollar index since the end of April, we can see that it's quite clearly in a bearish downtrend, where we can see a series of lower highs, series of lower lows as well, right? We see a series of lower highs, series of lower lows, right? And that means we can see a pretty clear bearish channel as well, right? We have a pretty decent bearish channel that we can identify for this instrument here. Right, just making the bearish, highlighting the bearish channel a bit more clearer, right? So we can see that the dollar index ran into resistance close to the upper trend line of the bearish channel, as well as this pullback, I would say overlap resistance level here. When I look at 105.02, this is a very significant overlap resistance, right? We can see that previously this level functioned as a pullback support in early November of last year. After that, it made a swing high resistance in mid-February, and making a second swing high resistance in the 2nd of April as well. So when it made this first swing high resistance, this pullback support level then proceeded to function as a pullback resistance or an overlap resistance, and it acted as resistance once more at the beginning of April. After which we saw that dollar index break above this overlap resistance, and then it did manage to find pretty decent support here on the 3rd and 6th of May as well. Of course, we see the bottom of this wick coming as low as 104.52, but generally you can see that this area did help, uh, or rather the dollar index did find support around this region as well. So we can see this is a pretty significant overlap level, which is where the dollar index ran into resistance once more. Right, so quite clearly the first resistance for the dollar index is at 105.02. Right, and then for the second resistance, right, if you're going to identify, there's another overlap level here at 105.57. We can see that in the end of April, dollar index finding support here for about 4 to 5 days, and then after which it ran into resistance on the 8th and the 9th of May as well, thus creating this overlap level here, right, which you can use to identify as the second resistance. Now, with dollar index falling, right, and should you have any short dollar index positions on, where we're going to identify a suitable take profit level, right? So we can use major support levels to help us identify those potential take profit levels for any short dollar index trades. Right, so when I look across this level here, which is at 104.09, I see a nice pullback support level here, right? We can see dollar index finding strong support here in early April, and of course finding support once again on the 16th of May last week as well. All right, sorry, 2 weeks ago. Right, so this is quite clearly a strong pullback support level at 104.09, and we'll identify this as the first support. The second support on the daily time frame would be this pullback level here that occurred on the 21st of March. So this level is at 103.24. Now we can also run the Fibonacci retracement starting from this swing low here on the 8th of March going up to the high on the 16th of April. Right, let's pull up all the fibs. Let's see what we get. Right, we can see here that the 61.8% Fibonacci retracement sits quite close to the first pullback support or the first support, and we can see the 78.6% aligned very well with the second support. So we have the presence of the Fibonacci retracements that are going to add further significance to these support levels here. Right, so that means on the support side, right, so this is a major support area for the dollar index. So any short dollar index positions, right, you should be looking to identify your take profit level slightly above 104.10, right? So remember, for short trades, this take profit level is going to be identified slightly above a major support zone, right? So that way we are increasing the probability of a successful trade. Now, of course, there are intermediate levels as well that I would like to identify, and that would be we'll do that as we go down into the 4-hour time frame. Right, there's another Fibonacci retracement that we can use. This time starting from here, the high on the 16th of April, going down to the low of 16th. Right, let's pull up all the fibs. We can see that the 38.2% Fibonacci retracement as well as the 61.8% align very well with the first and second resistance as well. So this adds further significance to these two levels. All right, so these are the key levels for the dollar index on the daily time frame, right? So if you have been shorting the dollar index since last week or perhaps even early today, right, take note, one of the first major resistance support areas for the dollar index is at around 104.10. So any take profit level for the short trade should be identified slightly above this support zone here. Now, let's see if there are any other intermediate support zones that we can identify, and I'm sure we can do that as well. Right, we can see that we can see there's a pretty decent intermediate support that has taken place here on the 17th of May till the 20th of May before dollar index bounced higher, right? So this is a pretty decent support level as well, and we can identify it as an intermediate support. So we can use this level at 104.42 to identify as the first take profit level for any short dollar index trades that you may have, right, just slightly above this level, and then the second take profit level can be identified just above this first support at 104.09. Right, so take note, this is how we can identify significant support areas, and then in turn use these support areas to help us identify a major or a suitable take profit level, right? And also there's a Fibonacci retracement that we can use. Starting from here, this pullback here on the 16th of May, going up to the high on the 23rd, we can see that this intermediate resistance at 104.42 also has the presence of a 61.8% Fibonacci retracement, right? So we can see that this is quite likely going to be a strong support zone as well. So your first take profit level should be identified around 104.50, right? And the next take profit level should be identified around 104.10. Now, of course, any clean break below this intermediate support is quite likely to see the bearish momentum gain further traction, and that's where we can expect it to come close towards this first support here, right? So take note, right? Any short positions for the dollar index, especially if you've been shorting since last Friday, right? Take note, your first take profit level should be around 104.50, and the second take profit level should be around 104.10. Right, so these are the key levels that we have for the dollar index on the daily and 4-hour time frame. All right, moving on, we'll cover the Aussie since we have CPI data out of Australia as well. So once again, we'll start the analysis with the daily time frame, and then we'll work our way down to the 4-hour time frame. Now, of course, with dollar index pulling back over the last 2 trading days, then of course currency pairs like the Aussie are likely to stage a rebound, which is what we have seen. So last Thursday and Friday, the Aussie found pretty good support around 66 cents and has bounced quite strongly. It's up about 40 pips since then as well. So quite clearly, the first support for the Aussie is at around 66 cents. Oh, yes, okay, the first support I would identify there, yep. And the second support level I see is a nice overlap here at around 65 cents as well. We can see previously the Aussie running the resistance here on 29th of April, and after breaking out of this level, it found support here on the 8th and 9th of May as well before bouncing higher. So this creates a nice overlap support level which we can use to identify as the second support. Now, first resistance is quite clear. It's simply this pullback resistance here that's occurred on the 15th of May, which is at 66.95. Of course, there are going to be intermediate resistance levels that we can identify as well, right? I see a nice overlap level here with the Aussie running the resistance on the 8th of March, and after that finding pretty decent support here on the 16th to the 20th of May as well. So this creates an overlap level, right? And I'm going to identify it as an intermediate resistance level here. Right, we can also run a couple of Fibonacci retracements, right? Let's start the first one. From here, this swing high that occurred on the 28th of December, going down to the 19th of April here, we can see that the the Aussie has crossed above 61.8%, so that this level is no longer valid. What may still be valid is the 78.6% here. Now, this is we can use this 78.6% to help us identify the second resistance level should we see the Aussie break above 66.95 or 67 cents. Right, when I look across the level at 67.20 or 67.63, right, there's a pretty decent pullback resistance here as well. We can see the the Aussie running the resistance here on the 19th and 20th of December before finally breaking higher. So this pullback resistance level here aligns quite well with a 78.6% Fibonacci retracement. It's going to identify this zone as the second resistance here. Now there's another retracement that we can draw, this time from this swing low on the 19th of April, going up here to the high on the 16th of May. Right, let's pull up all the fibs. Let's see what we get. Right, we can see, all right, 38.2% sits quite close to this overlap level here, right? We can see the top of this wick coming as high as 65.79, and we can also see that the bottom of this wick as well going down as low as 65.56. So there's a pretty strong support area here as well, our support zone, and I'll just highlight that, and we can just keep 38.2%. Now, with of course the Aussie rising quite strongly today after staging that rebound last Friday, right, we can then use this resistance levels, right, to identify suitable take profit levels for any long Aussie trades. Now, the first take profit level is going to be identified at around 66.67. Right, as I mentioned, this is an intermediate resistance level. This is where you should ideally identify your first take profit level, and the next take profit level should be identified at 66.95. Right, there's a strong resistance zone up here as well. Right, there's also one more final Fibonacci retracement that we can draw. That's going to be from here, 16th of May going down to the low on the 24th of May. I believe there's a 61.8 or 78.6 that we can use. Right, we can see that the 61.8% Fibonacci retracement aligns very well with the intermediate resistance, right? So this adds further significance to a potential resistance area here. So ideally, your first take profit level should be identified around 61.8% at the 61.8% Fib, and the second take profit level can be identified between 66.90 and about 67.10. All right, so take note, Aussie is rising quite strongly today as well after staging this rebound last Friday, and the bullish momentum should drive it up at least towards the 61.8% Fibonacci retracement. So remember, first take profit level should be identified around this intermediate resistance here. All right, with that, now let's move on down to the 4-hour time frame and see if there's a need to fine-tune the analysis. Right, okay, with regards to resistance, I think it's quite clear. This needs to be moved up a little bit, and this is fine. I'll just need to highlight this on the 4-hour time frame. Intermediate resistance, I think, is fairly fine. You can see this is a pretty decent consolidation period here, right? The Aussie finding support here on Monday 20th May till about 22nd of May. So for a period of 3 days, it was consolidating around this area. So what was previously a pullback support level could now potentially function as resistance, and this level also has the presence of a 61.8%. So it's quite prudent to identify your first take profit level around 66.60 or 66.70 as well. All right, I think these are the major levels for the Aussie. I don't think there's anything else that I would identify or change. Sorry. Let me see if there's anything else. If anything, I'll just adjust this over here, make it a pullback support, and we can see it. Okay, so on the 4-hour time frame, just some minor tweaks to the levels to match the body of the candle. But otherwise, I think this is pretty much it. Yep, we've got pretty much everything here covered pretty well. All right, okay, so take note, these are the key levels for the Aussie on the daily and 4-hour time frame as well. Now, of course, with CPI coming up, right, if we see softer than expected CPI data out of Australia, we are likely to see the Aussie reverse and drop lower. So should we see a bearish, should there be a potential for a bearish reversal for the Aussie because we see softer than expected inflation data on Wednesday, then I would use this first support at 65.93 or basically 66 cents to identify my first take profit level for any short Aussie trades as well, right? So take note, come Wednesday, of course, the Aussie might not be trading around 66.42 come Wednesday. So, but wherever it's trading, should we see softer than expected CPI data, that's quite likely going to cause downward pressure on the Aussie. And should we see that bearish reversal take place, then identifying your take profit level around the region of 66 cents would be a good idea to would be a good region to identify. Right, okay, then let's move on over to the euro, right? Since we got CPI data out of the euro area on Friday as well. And of course, similarly with the dollar selling off strongly last Friday, and also bouncing quite strongly today with a bullish momentum continuing today as markets reopen, right? So for those who may be long on the euro, I see a nice resistance level here, right? This is a nice pullback resistance at 1.0885. So ideally, your first take profit level should be identified within this zone here, right? Take note, this is a pretty significant resistance level, right? Previously, the euro ran into resistance here in early April, and then once again in mid-May as well. So this is a pretty significant resistance area. So your first take profit level should be identified within this first resistance zone. Second resistance for the euro is at about 1.0973, right? We can see this currency pair running the resistance here in mid-Jan, and then making the swing high resistance in early March as well. So this is quite clearly the next major resistance for the euro. So let's identify it as the second resistance here, and just identify it as a zone here as well. Right, okay, we can also run a couple of Fibonacci retracements. We can run one from here, this swing high on the 8th of March, going down to the swing low here on the 16th of April, right, we can see that the euro has already surpassed 61.8%, so we can't use this level anymore. Perhaps we can use a 78.6% retracement. Yep, there we go. Very nicely. The 78.6% retracement aligns quite close to this pullback resistance at 1.0885. So we have the presence of, or we have another factor that adds to the significance of this resistance area. So any long euro traders, right, you should be looking to identify your first take profit level within this region of the 78.6% Fibonacci retracement. Right, now we can also run a retracement on this uptrend here, but before that we can see that this is a pretty decent pullback support level for the euro that occurred last Thursday and Friday. And if I stretch the cross here, you can see this creates an overlap as well. So we can see the euro running into resistance here on the 3rd of May at 1.0812, and after breaking higher in mid-May, it found strong support last Thursday and Friday, thus creating an overlap level here, and we can identify this as our first major support. Now, second support is also another overlap level, right? When I look across here, the euro running into resistance here on the 25th of April till the 2nd of May, right? So for about 5 to 6 trading days, it failed to break out of this level here. So this was a strong pullback resistance. And then after it broke higher, it found support on the 9th of May before bouncing once again. So after bouncing off this level, it creates an overlap, which then can be identified as the second major support here. Now we can draw the Fibonacci retracement as well. We're going to start this retracement from here, the swing low on the 16th of April, going up to the high on the 16th of May. Right, let's pull up all the fibs. Maybe it's a 23 and 50 that we can use. We can use 23 and alright, yeah, we can use 50 as well, because you can see this price finding support within the 50% and the pullback and the overlap level itself. So let's keep 51. 50%, and here 23, we can see the euro has dropped below 23%, so let's not use that. So let's just keep 50% on our charts and highlight this as a zone for the second support. Right, okay, so these are the key levels for the euro on the daily time frame, right? And we can see it's rising strongly today as well. So yeah, take note once again, any long euro positions, right, your first take profit level should be identified within the vicinity of the 78.6% Fibonacci retracement. Now let's move on down to the 4-hour time frame and see if we can highlight any other, or if there's a need to fine-tune the analysis. Right, okay, in this case we can see here, I'll just move this up like this and adjust the zone accordingly as well. Right, okay, so this is a little bit better here on the 4-hour time frame. So you can see here quite clearly the euro running the resistance. We can see even here on 4th of April, 9th of April, 16th of May, and then 20th of May as well. So you can see this is a pretty strong resistance zone here. So ideally, right, identifying a suitable take profit level here, at least the first take profit level here, would be quite prudent to do so. Now, second resistance, you can see, is a range as well, starting from 1.0950 to as high as about 1.0980 as well, right? First support is fine, right? If anything, I'll just fine tune it a little bit like this, right? So you can see there's a pullback resistance here, and pullback support here, so creating this overlap level. Over here is pretty clear as well. Resistance, 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 and then finally support in early May as well. All right, okay, so these are the key levels for the euro, and you can even see when we look at it here, there's a descending trend line that got broken today, right? So we had a bullish breakout as well, right? So you can see here, right, this was a descending trend line that the euro had respected since 16th of May, right? And finally, after last Friday, it managed to break out of this level, and then bullish momentum has continued today. Thus, we have this bullish breakout currently taking place as well. So we had this bullish breakout take place, and we can now target the first resistance, right? The vicinity of the first resistance, starting from 1.0880 to about 1.0995 as your first take profit level. All right, okay, with that, then let's move on over to gold. And also, right, if you have any requests for any other currency pairs, all right, great, RJ. Right, we'll cover dollar franc as well. All right, great to see the requests come in. So let's start with dollar franc. We'll start on the daily time frame. Right, so you can see here dollar franc has been in a strong uptrend as well. You can see this is a very nice strong move since the beginning of the year, right? And part of that move was also caused by this surprise rate cut by the Swiss National Bank on the S&B on I believe 20th or 21st of March as well. So it was around this date, I think it's the 21st, where they announced a surprise rate cut, and you can see the uh, dollar franc break above 1.0888 quite strongly. So this level here was previously a strong resistance, right? We can see dollar franc running the resistance here on in mid-February, then again at the beginning of March, and then once again running the resistance in the third week of March as well. But after that, after the surprise rate cut happened, you can see it created a strong surge in dollar franc, right? So rate cut by the Swiss National Bank means the Swiss franc is going to weaken, and that of course is going to propel dollar franc higher, which is what happened on that day itself. And since then, it's been moving higher, and of course, but it's managed to stay above this pullback support level here at about 90 cents as well. So you can see after breaking higher, it has remained elevated, right? And this is a nice support level here as well. Right, okay. So quite clearly, the first major resistance level for the dollar franc is at 92.12. Right, we can see here this is a major swing high resistance here that occurred at the end of September 2023, and it's a place where the dollar franc ran into resistance right at the beginning of May as well, right? So you can see very clearly previous resistance, significant resistance levels are always tested, and they can cause prices to pull back as well, right? To stall and reverse as well. So identifying major resistance in the past helps us identify a suitable take profit level, and if you had been long on the dollar franc uh, since the rate cut that took place, right? If you had been long on the dollar franc since the third week of March after the surprise rate cut took place, and then noting that this is a pullback resistance here on the 31st of October, and this is a swing high resistance here on early October as well, we would have identified your first take profit level at about 91 cents, and the second take profit level would be identified at about 92 cents. Right? So that's why it is important to identify past resistance areas or past significant resistance areas, because they can then be used to identify suitable take profit levels for the long trade. Right. Okay. Now with that, when I look across this price level here at around 89.94, this is a strong pullback support that's been in place since the 1st of April. You can see dollar franc has bounced off this level several times, so this is where the first major support sits on the daily time frame. Okay, now we can also draw a Fibonacci retracement starting from here, this swing low on the 20th of December going up to the high here on the 1st of May. Right, let's pull up all the fibs. Okay, we can see the 23.6% aligned pretty well here as well, so we've got a pretty strong support zone for the dollar franc at around the 23.6% Fibonacci retracement. Right, and also we can see dollar franc topping out here last Wednesday as well. So I'm inclined to identify this as an intermediate resistance at 91.57. Right, I think this okay. So let's keep 23.6% here. Right, we can also draw another Fibonacci retracement, this time from this high here on the 1st of May going down to the low here on the 16th of May. I believe there might be a 61 or 78.6 that we can use. All right, okay, so it's gone past 61.8, but there's a 78.6% here, so let's just keep that. Right, and let's see if there's any other intermediate support levels that I can see. There's maybe a pretty decent intermediate overlap level here, where you can see dollar franc finding support at 90.88 from the 12th of April till the 30th of April, so almost a period of 2 weeks, finding strong support here. Of course, you see this wick here on the 19th of April dropping below, but generally you can see this level has held up quite well. And then after that, it proceeded to function as a pullback resistance starting from 7th of May till the 14th of May, so for another period, for another week or so. This level then function as a resistance. So we have an overlap level here that's pretty decent as well. Now, should we see the dollar franc come back towards 90.88 and sort of stabilize around here, this may help us identify an entry to go long as well as a long opportunity to be identified. Should dollar franc retrace down towards 90.88, stabilize around this level before potentially staging a rebound as well. Right, so take note, we may have a potential opportunity to go long on dollar franc again should it hold this price level at around 90.88. All right, so these are the key levels for dollar franc. For the daily time frame, let's move on down to the 4-hour time frame and see if we need to fine tune the analysis. I think pretty much it is okay. I would probably just add a Fibonacci retracement here, one more retracement starting from this low, 16th of May, going up to the high here on the 22nd. Let's pull up all the fibs. Right, we can see that this overlap support level at 90.88 also has a presence of a 38.2% Fibonacci retracement. So let's keep that on and identify it as a support zone here. Right. So should we see dollar franc pull back towards this level here, it may be a good opportunity to go long again. So wait for price to consolidate around this region here, and then we may have an opportunity to go long, and then we would use this overlap level to identify a suitable stop loss level. So we see 90.88 as a major overlap support. So I would identify a stop loss level that's going to be about 10 to 15 pips underneath this overlap level to give us a little bit of a buffer. Right, you need that little bit buffer. You're not going to place your stop loss at exactly the main support level, but you need to place it slightly underneath it to give us that little bit of breathing space. Now, of course, should you be short the dollar franc as well? If you have gone short on the dollar franc today, right, take note, this is a major resistance area at 91.57. So you should be placing your stop loss for the short trade about 10 to 15 pips above 91.58. And conversely, you should be looking for a clean break below this level here. We can see at 91.34, this is another intermediate support level. Should we see a clean break below 91.34, it's quite likely dollar franc is going to fall, drop lower, and that momentum could carry down towards the 38.2% Fibonacci retracement. So should you be short on dollar franc today, look for this clean break below 91.34, and then we can target the region of 91 cents as a potential take profit level for the short trades as well. Okay, right, let me see what else do we have. Right, okay, I don't see anything else for the dollar franc, so this is pretty much it. All right, okay, then with that, then let's move on over to gold. Right, so when we look at gold, you can see last Wednesday and Thursday, gold prices sold off pretty hard, but it did find support at around $2,330 per ounce here. Has managed to stabilize around this level and is retracing a little bit higher. Of course, with dollar index pulling back, right, gold prices are expected to climb higher as well. Now looking at this level here, you can see, oops, hang on, we can see that gold prices has found support just above the bullish Ichimoku cloud. Remember, when the Ichimoku cloud is green in color, it indicates a strong bullish momentum, and the cloud itself can help us identify a potential support zone as well. It could be the top of the cloud, within the cloud, or at the bottom as well, right? But generally, when it starts to approach the cloud, it's also something to take note of, where especially if the bullish momentum is as strong as what we currently see, the cloud is quite likely to function as an area of support as well. So if you had been shorting the gold prices since last Wednesday and Thursday, right, and by looking at this cloud on a daily time frame, we would have identified a suitable take profit level just slightly above this cloud as well. And there's also other factors that we would have used to identify a potential take profit zone for the short trade as well. Right, we can also run a Fibonacci retracement from here, 14th of Feb going up to the high here. We're going to pull up to 23 and 38.2%. Right, we can see here, not only was there the bullish Ichimoku cloud identifying a potential support area. We also had the 23.6% Fibonacci retracement identifying another support region as well. So looking at 23.6% and the cloud as the gold prices were pulling back, right? We would have used this area here to help us identify a suitable take profit level for the short gold trade. Right, okay, now talking about resistance, okay, quite clearly this is the first major resistance for gold, which is at $2,431 per ounce, and take note, 2,450 is the all-time high for gold here. So we have a pullback resistance that sits quite close to the all-time high. And the first major support looks to be around this pullback support level at around 38.2% Fibonacci retracement. All right, hi Emil. Yeah, we're covering gold as we speak. All right, we're covering gold as we speak. No worries. And because we see price consolidating here at around 2,330, but I'll like to identify this as an intermediate support level as well. Right, we can see at the beginning of May, gold prices were capped under $2,330 per ounce from 1st of May till the 8th of May. So for about a period of about 5 trading days before finally breaking higher as well, right? So you can see here it broke out of this pullback resistance, and then it found a little bit of support here, 13th and 14th of May, right? And then it's found support once again last Thursday and Friday. So you can see this is a pretty important level as well. So we have this overlap support level, the bullish Ichimoku cloud, and the 23.6% Fibonacci retracement to help us identify a major potential support zone here. All right, so these are the key levels for gold on the daily time frame. Right now, we'll move on down to the 4-hour time frame. Right, so looking at it here, you can see this overlap is pretty clear, right? Resistance here on 2nd of May, resistance on 6th of May. We can argue here it found support on the 13th of May as well. And then we can see here very clearly strong support last Friday as well. Now, on the support side, of course, with gold prices pulling back very strongly, perhaps these retracements to the upside are going to help us identify another opportunity to go short on gold. So now where could we identify the potential levels, right? I do see an intermediate resistance level here at 2,372, right? This was a pullback resistance level on the 10th of May and on the 15th of May, and after which it proceeded to function as a support on the 16th. So this then creates an overlap support level which finally got broken. So what was previously a support level could now potentially function as resistance. So the first major resistance for gold is likely to come in around $2,370 per ounce here. There's also probably a Fibonacci retracement that we can use on this downtrend here. So on this down leg, we're going to start the retracement from here, 20th of May, going down to the low here of last Friday. We can see that it's a 38.2% Fibonacci retracement as well. So we can, I think, use 38 and 61. Or is it going to be 78.6? Let me see. All right, I think I'll just use 38 and 61. So you can see that not only this is an overlap resistance level at 2,372, it also has the presence of a 38.2% Fibonacci retracement. So any retracement up here or any move up higher for gold prices could stall around this level of $2,370 per ounce. The next intermediate resistance is likely to come in around the 61.8% Fibonacci retracement, right? When we look across this level here, this is also another intermediate resistance level here. 12th of April, 19th of April resistance, after which finding support on 20th of May till the 22nd of May as well. So this is another overlap resistance here that's bounded by the 61.8% Fibonacci retracement as well. Right, so with gold moving higher today, edging higher today, it could stall around the 38.2% Fibonacci retracement. Perhaps this may be where we can identify a potential short entry as well. Now, if you have gone long on gold today, right, if you after seeing gold prices stabilize last Friday and its markets open today, and if you've gone long on gold today, right, your first take profit level should be identified around this region of the 38.2% Fibonacci retracement, and your stop loss should be placed just slightly below $2,325 per ounce, right? Remember, this is a major support area for gold, and your stop loss should be placed, ideally placed slightly below this level here. So maybe about 10 to 15 points just underneath this level here would be a suitable stop loss level. And then we can target the 38.2% Fibonacci retracement as a suitable take profit level for the long gold trade as well. All right, okay, so we've done gold. Right, okay, then let's go cover oil as well. XTI USD is an instrument that tracks the WTI crude oil futures. So as you can see, since the second week of April, gold crude prices have been in a strong downtrend and is finally found support uh, at around the $77 per barrel last week as well. Right, this is a pretty strong pullback support level here. Right, probably I would highlight it as far back as here. As you can see, since the 14th of February, this is a strong pullback support level. And let's see, and right, we can also see that it is somewhat trading in a bearish channel as well, right? We can see we have a pretty decent bearish channel as well. Right, so we could see crude prices probably run into resistance at around this pullback level here at $18 per barrel, and where the upper trend line of the bearish channel sits as well. So the first resistance that I see for crude oil is around, you can even stretch it as far back as here, see resistance here since 4th of March, then support here, right, finding support here at the end of March as well, and then resistance over here. So $80.50 looks to be the first major resistance level for WTI oil. And take note, it also has this bearish channel here as well, the presence of a bearish channel here as well. If I were to take the top of the wick, right, you can see that it's 1, 2, about 3 touches here to the upside, and about 2, 3 touches here to the downside as well. So this is a pretty decent bearish channel, and we have this overlap level at $80.50 and the upper trend line of the bearish channel itself to identify a major resistance zone. Now we can also draw a Fibonacci retracement for the uptrend and downtrend here. Let's start with this uptrend, starting from this low, 13th of December, going up to the high on the 5th of April. You can see there's a 61.8% Fibonacci retracement. Well, yeah, it doesn't sit very close to where the first support is, but it's good to know that there's a 61% just slightly below it. What about the 50? Is there any 50 that we can use? No, we can't use the 50, so let's just keep 61. Although this is a pretty wide range between $75.50, it's about a $1 range, but it's just good to know that there is a 61.8% retracement underneath this major pullback level here. Right, now the second retracement that we can draw would be from this swing high here, 5th of April, going down to the low of last Friday. Let's pull up all the fibs. We can see that it's a 38.2% Fibonacci retracement that aligns quite well with the overlap as well. So let's keep 38 and 61, because the 61 can be used to identify this pullback resistance here. So we'll keep 38 and 61. Highlight this as a zone. And then identify the second resistance for crude prices or WTI at around $84 per barrel here. 84.36. All right, so these are the key levels here. So with crude prices staging a nice rebound since last Friday, right? And if you've gone long on WTI oil, right, looking at the region that's bounded by the upper trend line of the bearish channel, and the first resistance at $80.50 would be a good area to identify as your first take profit level. Right, okay, now let's move on down to the 4-hour time frame and see if there's a need to fine-tune the analysis. Right, because of this pullback resistance level here, there's a nice pullback level here that occurred last Thursday. I would identify this as an intermediate resistance as well. Should we get a clean break above $78.72 per barrel, that might be the sort of bullish confirmation that we need to see crude oil prices rise up towards the $80 per barrel mark here. So take note, there's an intermediate resistance at around $78.72. And should we see a clean break above this level here, we are likely to see this bounce in crude oil extend higher and probably stall around the region of the upper trend line of the bearish channel and the first resistance at $80.50 per barrel. So this region here would be a good region to identify as a suitable take profit level for any long crude oil positions that you may have. All right, anything else? Probably not. I can probably just add one more retracement, Fibonacci retracement starting from here, 20th of May, going down to the low on the 24th. We can see there's a 61.8% as well. So if it clears this, right, intermediate resistance zone, right, we've got a pretty good chance that it's going to push up all the way towards the upper trend line of the bearish channel as well as the first resistance as well. Right, so take notice that the key levels for XTI USD. So this instrument tracks the WTI crude oil futures. All right, so before we end today's webinar, right, we'll cover one or two more analysis after this, but I'm just going to quickly start a poll as well, and truly appreciate if you guys can give your feedback with regards to today's session. All right, just going to launch this poll, and I would appreciate it if you guys can give your feedback with regards to today's session, and then we'll wrap up with another one or two more analysis where we will cover the indices this time round. Right, just a quick question as well. Are you guys able to view the charts while the poll is running as well? Just want to see if that's the screen is still visible for you guys. Let me just check on my end as well. Is it clear? All right, okay, doesn't matter. Okay, let's just wrap up the session with just looking at one of the indices. Okay, so let's wrap up by looking at the US 500. So for indices, I like to start the analysis on the weekly time frame. We can see here we've had a very strong run up in equity markets since since the end of October, and we saw this strong pullback here that occurred in early April as well. And we can see that it's made a new all-time high, right? So the previous all-time high for the US 500, so this is the instrument that tracks the S&P 500 futures. So the previous all-time high for this instrument was at 4,817.50, which was finally taken out earlier this year in mid-January. It then proceeded to make the next all-time high at about 5,282, which also now has been broken last week as well. So the new all-time high for the US 500 stands at 5,350.29, and the first major resistance, of course, is going to be around this pullback resistance here, or around the all-time high here. Of course, this pullback that occurred here is quite naturally going to be our first support at 4,963. And we can also run a Fibonacci retracement as well from here from this swing low 10th of October going up to the all-time high. Right, we can see there's a 23.6% Fibonacci retracement as well that we can use to identify this as a zone. And I think there's an intermediate support that we can identify as well. And with regards to resistance, should we see this new all-time high get taken out, how are we going to identify the next major resistance zone? For this case, we would need to use a Fibonacci projection, or sorry, an extension. So we're going to start from here. The key extension levels sit at 127 and 161%. So quite clearly 137 has already been taken out. So let's not keep that. We could probably use the 161% Fibonacci extension to help us identify the second resistance, but maybe there's something a little bit closer and we can identify that by running I think a projection. Let's start the projection from here, 10th of October to 24th July to here. Okay, now this is already taken out, not this projection. Probably the next projection that we can use is from here, 23rd October, 1st April, ending at 15th April. Okay, so we have a Fibonacci confluence, we have a 61.8% Fibonacci projection, and a 161% Fibonacci extension as well. So we can use this to identify as the next major resistance here. And if anything, maybe we can just use one more extension, and that's going to be from here. This is a smaller extension starting from 1st April down here to 15. Yeah, perhaps we can use this as well. Let's see, 127, 161. Okay, so you can see the first resistance also has a Fibonacci extension close to it, right, at about 137%. And we can also see that the next resistance is probably going to come in at the 161% here as well. And should we see these two levels get taken out, especially if 5,500 get taken out, then the next major resistance for US 500 is likely to come in come in at this level at around 5,640, which is identified by the Fibonacci extension at 161% and the Fibonacci projection at 61.8%. All right, so just before we wrap up today's session, I'd just like to thank you all for tuning in today. Take note, this is the calendar for this week. These are most of the major economic events to look out for, and my calendar is on GMT time here. So we've got a lot of inflation data this week. We've got Aussie CPI data, flash CPI data out of the Euro area, and of course we've got the PCE price index as well. So take note of how the inflation data is likely to drive the direction for the respective currency pairs and what you should look out for, right? Which are the key levels to look out for, as we covered the Aussie today, the Euro, the dollar index, and gold as well. So take note of these levels as the week progresses. All right, so with that, thanks everyone for tuning in to today's webinar. Do look out for all upcoming webinars by IC Markets. Have a great trading week, and I'll catch you all in the next session. All right, thanks everyone.